Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income idea. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. Nothing in this video should be taken as personalized investment advice. To read more about it, please see the description below. For numerous reasons, we could be entering a golden age of US midstream stocks. And that's great news for today's income pick, Holly Energy Partners LP, traded on New York Stock Exchange under symbol HEP. John?
Yeah, thanks, Mo. Since late June, the price for West Texas Intermediate has climbed roughly 18%, from around $67 per barrel to more than $79 per barrel. Crude oil prices have been on the move since supply is tightening from OPEC Plus production cuts, a slowdown in U.S. shale production growth, peak driving season during the summer, and strong demand from China and India. Fears of recession are always lurking around a corner, but even U.S. Secretary of Treasury Janet Yellen said she doesn't expect a long-promised recession to even materialize. And even if it does, Wall Street analysts believe it will be mild and short. And these dynamics have led Goldman Sachs Group to raise its forecast for crude to $86 per barrel by the end of the year.
While midstream companies do not generally benefit from strong oil and gas prices, since large part of their sales are contract and fee-based, high prices and strong long-term demand show that industry is in the midst of some of its best year of growth and profitability ahead.
Yeah, exactly. For example, the U.S. Energy Information Administration, or EIA, revised its expectations for U.S. GDP growth upwards to 1.5% this year and 1.3% in 2024. So the upward revision was fueled by strong first quarter GDP growth. And that's just the short term. Further out, the International Energy Agency, which is the IEA, says strong oil and gas demand will remain critical through 2050. The reason? The massive scale in which the world uses oil and gas. It's about a lot more than just fuel for your car. For example, petroleum products are used in everything from electronic components, clothing, and this includes things like acrylic, rayon, and even vegan leather, sporting goods equipment like golf balls, footballs, and cosmetics, perfume, toothpaste, Tylenol, heart valves, dentures, home products like dish detergent, building supplies like insulation, pillows, house paint, etc. Like it goes on and on. You can't really get away from the impact that oil has on your daily life. So in 2021, oil and gas supplied 52% of the world's energy needs. By 2050, IEA projects that oil and gas will still supply around 47% of global energy. This projects demand for oil will grow from 94.5 million per barrel per day in 2021 to 102 million barrels per day in 2050. So this points to prolonged period of growth for U.S. oil and gas, and in particular, this will benefit midstream companies.
Okay, so now what can you tell us about Holly Energy?
Well, yeah, Holly Energy Partners LP provides petroleum product and crude oil transportation, terminaling, storage, and throughput services to the petroleum industry. This includes subsidiaries of HF Sinclair Corporation throughout the U.S. HF Sinclair actually is in talks to acquire all of its outstanding common units of Holly Energy. It currently has a 49.995% non-operated interest, but there is, of course, no guarantee that this will go through. So there's no reason to not look at Holly Energy. So through its subsidiaries, Holly Energy Partners and its joint ventures owns and or operates petroleum products and crude oil pipelines, tanks, and terminals across much of the U.S. As far as its infrastructure goes, its pipeline networks includes 1,200 miles of pipelines, regional crude system, gather systems for Sinclair refineries and other third parties, refined product outlets for Sinclair refineries. Its terminals includes 8 product terminals and 2 crude terminals with 4.5 million barrels of operating storage. It also includes product distribution and crude gathering for Sinclair and, again, other third parties. And through joint ventures, it has a 25%. Its revenues are nearly 100% fee-based, with the minimum volume commitments tied to the producer price index, which is what inflation is sort of based on, or the Federal Energy Regulatory Commission.
John, I was reading that its distributable cash flow was up 30%.
Yeah, so for the first quarter ended March 31st, Holly Energy announced that revenues increased 19% year over year to $143.3 million. Net income was up 16% year over year at $57.5 million, or 45 cents per unit. And adjusted EBITDA climbed 27% to more than $108 million. Meanwhile, distributable cash flow, as you just mentioned, advanced 30.2% to $83.9 million. So you can kind of see why HF Sinclair would want to get their hands on Holly Energy.
And I also read that it maintained its quarterly distribution at 35 cents.
Yeah, with nearly 100% of its revenue being fee-based, Holly Energy is able to deliver sustainable free cash flow and increase returns to unit holders over the long run. This includes its distribution. Limited partners, for the record, call their dividends distributions. So this past April, the board of Holly Energy declared a quarterly cash distribution of 35 cents per unit or $1.40 per unit annually for a yield of 7.2%. And that's more than twice the current inflation rate of 2.9%.
And how have the Holly Energy stock been holding up lately?
Holly Energy Partners distribution has held steady since 2020, but its shares definitely haven't. Since bottoming in March 2020, Holly Energy units have rallied an impressive 282%. Holly Energy right now partners units are also up 20% over the last 3 months, 12% year to date, and almost 20% over the last 12 months.
John, thank you so much for your analysis on Holly Energy Partners LP. Just to recap, it is a great midstream company with assets across the US. Its revenues are nearly 100% fee-based with MVC revenue tied to PPI or FERC. Its solid first quarter results were supported by a safe and reliable operation and strong volumes in both crude oil and refined products, transportation, and storage system. This allowed it to continue to provide reliable high dividend of 35 cents per unit with a target distribution of at least 1.3 times its payout is more than safe. That's it for today. We'll be back with another video soon. If you want to read more about John's income ideas, you could head directly to www.incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.